Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, November 17th, 2010. An unbelievably quiet day on Wall Street today. We have just crossed 100 million traded on the SPY today. That is extremely light volume for 2:15 p.m. Eastern Time as I do this video. Now, a couple other things to go over. First off, the markets are flat to slightly positive. We're seeing right now the Dow is up 3 points, NASDAQ up 14 points, and the S&P 500 up 2.5. So again, fractionally positive market today. No volume whatsoever. Probably one of the lighter days of the year following one of the heavier days of the year yesterday in that massive sell-off, and it's as if nothing ever happened. I mean, today it's almost that freakish sense in the market is just so calm out there. Again, market's just kind of waiting. Traders are taking the day off or just sitting on the sidelines trying to evaluate what they should do next. And again, the Federal Reserve is out there continuing to pump money into the economy via POMO, which again is the QE2, where they buy treasuries from the banks and give the money right into the banks, and the banks can do what they want. Options expiration is this week. The first couple days were down in this market, including last Friday. Now we're seeing a little bit more of a neutral day. Does that mean tomorrow and Friday are up, or are we going to see more downside for Options X? Remember, institutions play games on Options X. Their job, or what they do, is to push the markets in the direction where they maximize profits on those options. So if there's more calls out there, they'll bring the market in, so those expire worthless. They take the whole premium. All right, if there's more puts out there, they'll push the market in the opposite direction, in this case up, and again, that takes out those and makes them equal the premiums. Now, a couple stocks that I want to talk about here. Today, the market's so quiet, we don't have to cover much on the market today, aside from just a little basis, but I want to point out a couple things. Number one, this stock right here, CIIC, is breaking out to the upside beautifully here, folks. Take a look at the daily chart. Big breakout here. This has been a stock I've talked about to my premium members, and I do have a position in myself, and again, it just made new highs of the day here. Take a look at this breakout. I love this consolidation pattern. It's a no-brainer consolidation pattern breakout, and again, beautiful move. We're trading here at 67 cents, up 19% today. If this gets going and squeezes, this could easily go to 75, 80 cents in the next day or so, and even $1 or over the next few days if it gets started. And I mean that seriously, folks. The upside potential here is massive. I love the long consolidation pattern. Look at the breakout above the 50 moving average today. That is a thing that you love to see. Any way you cut it, that is a thing of beauty. All right, so again, stay tuned. We'll continue to keep you guys posted on this play. But again, Research Center members already up 20% on this play today alone, as again, we continue to make money. Yesterday, we nailed the shorts beautifully. Pulled QID off the table, pulled at Las Vegas Sands off the table for more than 10% on the short. These are the type of plays. Yesterday, I moved out on a majority of my shorts into a neutral stance, and today we're making a nice little bank here on one of the small cap plays. And that's all we're trying to do here. Play the short-term market. When the market bottoms out and it looks like it's going to bounce, then we start playing the long side. That's all it is. You know, it doesn't take a genius to see this. And again, that's what we're here to teach you how to do, to help you how to do, and again, give you the plays ourselves, give you the market guidance, the education to be able to do this again in your own portfolios and own accounts. And again, you just have to join the Research Center, folks. It's that simple. It really is. And this CIIC looks like it's heading higher now, breaking out to the upside. Beautiful break here. 67 cents almost cleared. And again, looks like it's going to head towards 70 plus cents today. I think 75 cents is a good possibility today. So again, beautiful start to a breakout. The breakout could just be starting here with an ultimate target of 75 cents and then $1 plus on this play if it really gets going. All right, let's go over a couple other stocks. First of all, let's go to the dollar. The dollar here trading slightly lower. I went into a minor downside bias on the dollar in last night's Premium Research Center video. And again, if you get the Research Center, folks, you get everything listed under the Research Center, so it's a no-brainer. $49.99. You get 30-minute plus videos a night, every night new videos. I mean, it's just nonstop. Daily market reports, hot charts and alerts, all that stuff. But the point is here of bringing up the dollar is that yesterday I went into a small negative bias on this. Today the dollar is slightly lower. What is the market doing? It's slightly higher, flat to slightly higher. So it all makes sense. You know, everything really does make sense here today, and again, that's a beautiful thing to see how the dollar just comes down a little bit and it keeps the markets flat to positive like they are today. All right, what else do we have going on here? Goldman Sachs is up 23 cents on the day. Basically a flat day there, mirroring the markets. Apple Computer having an okay bounce today, up 58 cents. But you can see these little gains. I mean, after such big drops, the market's not exactly roaring back. It's just flat to slightly positive like the index are showing us. Amazon is one stock that I highlighted a couple days ago as a hit of the 50 moving average. Take a look here on the daily chart. You can see 50 moving average right there. You're getting a little bit of a bounce today. That's just technicals right there working out perfectly. So again, if you start to consolidate in a bearish manner, that means a small sideways float to up, and you could actually go down to this blue line, or you could bounce back to the 20. That's what we're waiting to see, and we'll follow that very, very accurately over the coming days. Make sure everyone's fully informed about the direction this could take us. All right. What else do we have today? Let's take a look at ExxonMobil. ExxonMobil is up a little bit. Notice yesterday on the daily chart it came into the 20 moving average just above, so today it's getting a little bit of a bounce. Market by no means is very strong today, and I want to make that clear. Overall, markets are flat to positive today. Okay, that's nice. Everything's happy about that. But after such a dramatic down move, you would have seen in the last month, if this was a month ago or 3 weeks ago, you would have seen a dramatic move back up today. That's not happening. My speculation is it's options expiration. The institutions have a lot of calls out there. A lot of people bought calls over the last 2 months or so. They don't want to pay the premiums. They don't want to lose their money on those. So again, they want to push the market down into Friday, or at least into the first half of this week, to scare those weak-handed call holders out of the market. And again, by doing that, then they again maximize their profit, and that's what it's all about, folks. Remember that. Now, again, later this week, early next week, you may see a move up. Why? Because again, POMO will continue. The banks will eventually use that POMO money to push into the markets to float it up like the Federal Reserve wants. And again, that could be it. But again, this last second half of the week's more a wild card. Next week's more of the week. You probably expect a sideways float to up on the markets. All right. Let's go over a couple of the charts here. Go back to the intraday. That's your intraday Exxon. Let's just go back and look at the spiders again. Spiders really amazed me today for a couple of reasons. Mainly because look at the sideways channel here. I mean, we've been in a sideways move today. There's no volume in this market whatsoever. 20-cent range basically since 10 o'clock today. You started flat, you moved up, and then you came back in, and then since then you've gone in a 20-cent range the whole day. No signs of breaking out or breaking down here yet. Again, we'll watch towards the end of the day as the volume may increase slightly. But again, it's going to turn out to be one of the lighter volume days of the year as, again, we approach 2:30 p.m. Eastern Time. Now, again, folks, bottom line is this. You want to get involved. If you're not someone who can have time during the intraday period, then you don't want to necessarily do the chat room. I'd say if you have an hour every day that's not lunchtime, then you want to be in the chat room because that will give you the opportunity to learn, ask questions of our chief market strategists, including myself, in that intraday stock period, and we'll call out plays, swing trades, day trades, you name it. You ask questions, we'll tell you our thoughts on that particular stock or ETF or commodity or currency. But again, if you don't have that time intraday, then you need to be in the research center. Research center including everything. It gives you all the plays that we've made so much money on over the last few days as this market dumped. Again, our turn date nailed as of last Tuesday's top. And again, profits made on the downside. Now it's more of a neutral bias with a couple small cap plays here, making some money there. We'll start to accumulate more plays in the coming days. Be ready for that. Join now. We'll talk to you then. Take care, folks.